Brought to you by Royal Financial Trading. We're going to look through, see what's going on this morning on the currency markets. Hopefully with this a bit of action. There is a bit of action. Euro dollar eases off fresh 2017 tops near 114.20 and the German CPI eyed. Dollar yen rising bond yield environment doesn't help yen, and Treasury yield curve steepens from flattest since 2007. So plenty of excitement there on the financial front for the currencies, or drivers there. Moving along, we've got Ed Matz from matrixtrade.com. How are you today, Ed?
I'm very good, Zach. And yourself?
I'm here just about in control of events. You've sent us a chart here. What is this telling us, the US 20-year yield versus the dollar index?
Well, it's telling us is the program's wrongly named, if you don't mind me saying so. It's not currency in play, it's central banker in play, particularly after yesterday. It's curious because central bankers are there to reduce stability, reduce volatility, encourage stability so that they can work the economy with the right interest rate policies and that everyone is happy. And yet they're sending out mixed messages. And if you step back and saying, what are these messages really saying? You've got to look at the fundamentals, is what they're essentially trying to control. And the fundamentals are driven by, well, let's ask the question, what is foreign exchange driven by? What is euro dollar, dollar yen, euro Canada? What really moves a currency market? And yes, it's supply and demand, who's buying and selling, but it's the people who invest in those currencies looking for a return where the money will stay or leave permanently, not like punters like you or me who go in for 50 points, 100 points, whatever. It is the real investment flows, and that's determined by what the economy is doing and by what interest rates are doing, and therefore what central bankers are doing. And that's why it's all very well saying, well, what is the differential between one currency to another? You need to look at the longer end, because that's really what the central bankers are trying to control. That's really reflecting what's going on in the real economies, and therefore in the longer term, in what the actual currency markets are and should be doing.
Let's swing. Can we just swing through the next chart there? We've got the euro dollar differential, 10-year differential. We've obviously got the euro at an extreme at the moment. What's your call here?
Basically, the first obvious thing to do is when central bankers come out and say a lot and nothing at the same time, markets get overexcited. You can see the differential is not keeping in track with the euro dollar, which basically says it can't be sustained in the short term. So all these currencies charts related to the differentials are all saying they're overdone. This is hype, at least for 24, 40 hours, probably to the end of the week. So every currency like euro dollar, cable, dollar Canada, Aussie, Kiwi, they're all fades for the next 48 hours. Today's top, you'll probably see New York. Europe will typically set it off until New York comes in. New York will try and buy it, and 2030 on the euro, 1430 is, I reckon it's worth 1% on the downside, 1280, 1430. And that's when you get overhype in a market, when there's not something real driving it, as reflected by the differential. It's a trading range. So it's 150 point euro dollar trading range. I buy below 113 and I sell above 114.20.
Okay.
It doesn't mean it's not going higher. It means it's overhyped. We have a target of 114.90 on euro dollar, but I wouldn't be surprised if we don't see that this week. We will probably see it next week because the market has got overhyped. Yeah.
Okay, let's move along.
You want to look at
finally on cable. Is this politically influenced at all?
It should be politically influenced. It's obviously been buffeted, driven left, right, and centre by comments from central bankers. Carney just kind of did a complete U-turn, having sounded dovish. He's now backed off that, and he's sounding hawkish. But look, Zach, where is cable now? Cable is pretty much where it was when everyone was expecting a 100-seat majority for Theresa May, and that we're going to have a hard Brexit, and the garden was rosy. Now we have political instability. It's not clear, certainly, what Theresa May will be able to do, given the DUP, her own party, and also the Europeans trying to exploit that political weakness. There's quite a lot of uncertainty still out there, and yet cable is at the same price. And the reason why cable is at the same price isn't because of sterling, because euro sterling is weak. Cable is at that price because of that the dollar interest rate have come off. So this is a dollar play. If you want to play sterling based on politics, you need to be trading euro sterling. And that, I personally think it's going to snap down probably into next week, and then there'll be a better buy for a continuation of a politically driven trend. So you can see, although this cable chart, have you got the cable differential chart showing? You can see that cable is actually lagging it because of that inherent sterling weakness due to the politics. Whereas the differential is actually saying, well, you want to watch out, there's something real here. So you step back and say to yourself, what's really going on in the UK? You've got political instability, which means sterling relative weakness, but it actually means we've got a dollar-driven market, and that the differential is saying that cable should actually be higher. So when the likes of Carney come out and say that, actually things aren't so dovish, in fact we may need to tighten in the near term, he's actually reflecting the real differential, the real movement in the real economy. That if nothing, the world hasn't fallen apart. The UK economy doesn't seem to be on a precipice despite all the political uncertainty, and so therefore the currency can still appreciate against certainly against the dollar as they continue to make hawkish noises, which means they are going to raise interest rates, probably not as soon as people are making out, but it's down the line. And in fact, the same for the other, the commodity currencies. You've heard a lot from Pollux yesterday. That's the Bank of Canada, Norway, Aussie, Australia, and New Zealand. All these central bankers are reacting to an economy that's been driven, or that seems quite hot or relatively hot, because of higher commodity prices. And yet commodity prices have come off reasonably hard in the last 3, 4, 5, 6 weeks. So although they sound hawkish now, based on an economy and a market that was relatively hawkish, it's actually saying there's the substance, the commodity price that's driving this currency strength isn't there. And that, in fact, dollar Canada against 129.50. Aussie against the brick wall of 77.50.
Let's go on to the next, just the final chart you sent. So dollar Canadian falling like a stone. Is there going to be any respite here?
Yeah, exactly. You see that low on the top of the chart, rather halfway through the chart, and the pink is 129.50. It's a trend sequence down into that level, which actually is an augur of a further Canadian dollar strength down the line. But it's overdone. And in fact, I don't know if you can see it on the chart on the differential. Again, that's a trend sequence down, but the differential has already started turning higher. What you typically see here, Zach, is at the end of a trend sequence, the breadth goes, there's divergence, there's no real, there's fragmentation. And you can see that the differential, despite Pollux, despite everything else, the differential is saying, I can see a rude word there, there's nothing going, it's actually turning back up. And this move down, Canadian dollar strength, is actually is a bit of a maverick. It should be dollar Canada is close to a turn, and that's why there's a lot of hype at the moment, because the market is getting short dollar Canada.
Okay, let's go on to the trade of the day we can, which you may or may not agree with. Euro dollar bearish price RSI divergence 114.30 to 35 level is a tough nut to crack. Sell euro dollar 113.95, stop loss circa 114.20, take profit around 113.50, risk to reward ratio 1.28 or 1.8 rather.
But your stop's been triggered, yeah? 14.20 did you say the stop was 14.20?
We're selling at 113.95. So we're looking. So it's a stop.
Try and get above 114. Wait for New York to come in. They'll say, and they'll bid it up, and then if it doesn't follow through, they'll be sitting there long at bad levels. So I'd wait for the New York Open, and I would sell euro dollar above 114, 114.50 stop. On the day, you're probably not going to get much more than 13.50. So you're talking 70 points versus 30-point loss. But I think it's going back down to 12.80 over the course of 3 or 4 days, probably next week.
Okay, let's move along to the trading positions of the the people in the market, trading the market. Short of euro dollar, 67 to 33, 50-50 on cable, roughly 50-50 on dollar yen, and then short of dollar Swiss, long of dollar Canadian, and long of the Aussie dollar and short of the Aussie dollar and euro sterling. So a bit of a mixed bag there, but the highlights, I suppose, really being so short of the euro.
I think fade every currency against the dollar in the short term.
Okay.
Yeah, I would. You can always got to put a caveat. I don't know where your sentiment figures are coming from, the actual positioning. You've got to put a caveat on sentiment because a lot of people don't fully understand the nature of. They say 70% is short of a certain market. Well, that's fine. 70% of all those people with positions, but you've got to remember that may represent 15% only of people who could have positions in the market. So although those, that 15% or the 70% short could be swamped by someone else coming in the other way.
Okay.
And that's the stock markets of the last year or two. People assume the market is long, and yet Swiss National Bank comes in and buys a shed load of Apple, and they weren't there before. And everyone's saying, well, the market is short. It shows they're short. But I'm afraid the Swiss National Bank just bought 5 times the size of the market. So the market is in fact ends up short, even though the readings are saying they're long.
Okay, let's just finish off with
today's.
I do indeed, Ed. Let's just finish off with the economic calendar. Germany, we have the consumer price index, GDP analysed in the US this afternoon, as well as the Fed's Bullard speech, which I believe is in London, which is a treat for all of us in this country. On that note, that was it for FXstreet Currencies in Play, brought to you by Royal Financial Trading and by Ed Matz from matrixtrade.com.